Hey everyone, welcome back to Corporate Decoder, the place where we unpack the wild world of corporate filings. And let me tell you, Flora Growth Corp has some really interesting things brewing, like a name change and a whole new class of shares. So grab your popcorn, because it is going to be a ride. We are diving into a preliminary proxy statement from Flora Growth Corp. Think of this as a detailed invitation to a very important shareholder meeting. This is where the company lays out all the big decisions they want shareholders to vote on. It is not just about routine stuff. We're talking about potential name changes, new share structures, and big shakeups in their employee benefit plans. So the big meeting is set for the 19th of December 2025, and what is on the agenda? Well, get this. They might change their name to Stack Corp. Why the change? It seems to be all about aligning with a new digital asset strategy involving something called zero-G tokens. It sounds like they're moving into the crypto and AI space, which is a pretty bold pivot. Now, they need your okay to even consider this name change. So, proposal number 1 is all about giving their board of directors the power to officially change the company's name. It is not a done deal yet, but they're asking for your blessing to make it happen if they decide it is the right move. Next up, they want the flexibility to create a new class of shares called preferred shares. This isn't something they plan to issue right away, but it gives them the option to do so in the future for things like raising money or making acquisitions without needing to ask shareholders every single time. It sounds like a way to keep their options open for future growth. This one is about their employee compensation plan, specifically the 2022 incentive compensation plan. They want to increase the number of shares available for grants. This is pretty common as companies grow, as it helps attract and retain talent. They're asking to boost the number of shares issuable under this plan significantly. Then there is proposal number 4, which involves approving stock options for key executives like the CEO, CFO, and executive chairman. These aren't just standard options. The vesting is tied to ambitious stock price targets like reaching a market cap of over $1 billion. It is a clear signal that they want their leadership team to be heavily invested in shareholder value. This is where things get a bit more interesting with talk of private placement transactions and something called zero-G tokens. They've already sold some shares and warrants in a private placement, and this proposal is essentially asking for shareholder approval to issue the shares that will come from those warrants if they're exercised. It seems like they've already done the deal and are now just cleaning up the shareholder approval part. This is a big one. They've entered into a deal with DeFi Development Corp, where they've taken out a convertible note, and it is not just in US dollars, but in Solana. Yes, you heard that right, a crypto-based loan. If approved, this note can be converted into company shares. This shows a clear move towards integrating digital assets into their core business. Talk about a recurring theme. Similar to the DeFi deal, they are also getting a convertible note from Zero Gravity Labs Inc., also denominated in zero-G tokens. This again signals their deep dive into the digital asset space and potentially a strategic partnership. Remember, the executive chairman of Flora Growth Corp is also the CEO of Zero Gravity, so there might be some interesting dynamics there. Here is another classic move. A share split. They are asking for the authority to do a forward stock split, potentially anywhere from 2-for-1 up to 10-for-1. The idea here is usually to make the stock price more accessible to a wider range of investors, potentially boosting liquidity. Finally, proposal 9 is the catch-all, asking for permission to adjourn the meeting if needed. This is a standard item that gives them flexibility to gather more votes if any of the other proposals are close. Now let's peek at who owns what. As of the 17th of October 2025, there were 721,959 shares outstanding. It is interesting to see the ownership breakdown, with significant holdings by individuals like Clifford Stark, who used to be CEO, showing a large stake. This gives us a sense of who the major players are. This table is a bit technical, but it tells us how many shares are set aside for employee stock options and other equity awards. As of the 17th of October 2025, they show a total of 66,699 securities outstanding under their equity compensation plans, with 51,584 remaining available for future issuance. This is important for understanding potential dilution down the road. Alright, let's talk money. Looking at the executive compensation for 2024 and 2023, we see some substantial salaries and bonuses. For example, Clifford Stark, the former CEO, had a salary of $420,000 in 2024. Danny Vayman, the CFO, also had salary and other compensation breaking down to over $1 million in 2024. These numbers reflect the high stakes and significant compensation packages often found in companies aiming for rapid growth and market expansion. This table is a snapshot of unvested stock options and awards held by executives and directors as of the end of 2024. For instance, Clifford Stark had a mix of options and SARs, or stock appreciation rights, outstanding, with various exercise prices and expiration dates. This gives us insight into the long, term incentives that are in place for the leadership team. For the independent directors, their compensation in 2024 appears to be more modest, primarily in cash fees and some stock awards. Edward Wu, for example, received director fees of $40,000 and share awards valued at $65,000 for his board service. This is typical for non-employee directors, focusing on retainers and some equity to align their interests with shareholders. Digging into the executive agreements, we see Clifford Stark had a consulting agreement with a salary of $420,000 and a significant grant of SARs tied to company performance milestones. The vesting schedule for these SARs is quite aggressive, requiring substantial stock price increases, which aligns with the company's ambitious targets. Now, let's look at the new CEO, Daniel Reyes-Faria. His employment agreement starting September 2025 comes with a $600,000 salary and stock options. The vesting of these options is tied to VWAP, or Volume Weighted Average Price, targets. This structure is designed to reward sustained leadership and long-term value creation. We've already touched on the private placements, but this section dives deeper into the dilution aspect. They are looking for approval to issue shares from warrants sold previously. They had 581,994 shares outstanding before this, and the potential issuance of warrant shares could significantly increase that number. They are upfront that this will dilute existing shareholders, affecting voting power and economic rights. This is where we see the Solana and DeFi Development Corp. deal. The principal amount of the convertible note is in Solana, and it can be converted into company shares, with a maximum of 686,263 shares issuable for the principal alone. This reinforces their strategic shift into the digital asset space and highlights the potential for increased share count and dilution. And another one. The Zero Gravity deal is similar, involving Zero-G tokens and the potential for over 4.5 million shares to be issued. With Michael Heinrich being the executive chairman of Flora and CEO of Zero Gravity, this certainly raises eyebrows about potential conflicts of interest or strategic alignment. Back to the share split. If approved, the board can enact a split anywhere from 2 for -1 to 10 for -1. As of the 17th of October 2025, they had about 721,959 shares outstanding. A 10 for -1 split would mean over 7 million shares outstanding. This is a move to potentially make shares more affordable for retail investors and improve trading liquidity. Looking at the outstanding equity awards for directors at the end of 2024, we see figures like Edward Wu holding options with an exercise price of $273. This table, along with the executive award tables, gives us a clear picture of the equity incentives designed to drive performance and align leadership with long-term shareholder value. Let's circle back to that 2022 plan for employees. As of the 17th of October 2025, they had only 115,385 shares left available for issuance. So, this proposal to increase the pool to 10% of fully diluted shares is crucial for their ability to continue incentivizing employees. Without this, their ability to use equity as a compensation tool would be severely limited. Then we get into the really technical side, especially concerning tax implications for those receiving options or shares. They spend a lot of time explaining the complexities of non-qualified stock options, incentive stock options, and the infamous passive foreign investment company rules, or PFIP rules. This is a crucial reminder that moving into digital assets and having foreign operations creates significant tax considerations for a US taxpayer. So, what is the big picture here? Flora Growth Corp is making some dramatic strategic shifts. The potential name change to Zero Stack Corp and the heavy involvement with Zero-G tokens and Solana clearly signal a pivot towards digital assets and AI. This is a high-risk, high-reward move. On one hand, it could unlock new markets and significant growth if their digital asset strategy pays off. On the other hand, it is a highly volatile space, and the company's financial health and ability to execute this pivot are key concerns. The dilution from the various private placements and convertible notes is substantial, meaning existing shareholders will see their ownership percentage significantly decrease. However, the goal is to fuel growth and create a much larger, more valuable company, aiming for a market cap over $1 billion. The aggressive stock option vesting targets for executives reflect this ambition. In conclusion, Flora is charting a bold new course. Whether this translates into long-term shareholder value will depend on their execution in the digital asset space and their ability to manage the significant dilution that comes with their growth strategy. It is definitely a company to keep a close eye on. Alright, that is our breakdown of Flora Growth Corp latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.